Welcome to Addicted to Real Estate TV. On today's episode, we're going to talk about the myths in the real estate investing business. So stick around. I'm going to give you some information you're never going to forget.
To say you gotta know somebody, or know somebody to get somewhere these days. To say you know that's alright, yeah that's alright. Cause you know that's alright with me. Yeah, you know that's alright, yeah that's alright. Cause you know that's alright.
Hi, I'm Phil Falcone, your host of Addicted to Real Estate TV. Today's episode was sponsored by Executech Suites, where for only $495 a month, you can get an office big enough for one person with the furniture, the telephone on the desk, the telephone number, the fax numbers, 2 full-time receptionists to answer the phone in the name of your company and patch the calls to you, conference rooms, mailboxes, printers, copiers, scanners, janitorial services, utilities, and much, much more. All for $495 a month. Check them out at the website below or give them a call at the phone number below. All right, today I want to share with you the myths in the real estate business, okay, that you hear over and over and over again. And let's talk about it, and I want to share with you my thoughts on some of these things. First one I hear all the time is that you need money to make money. Oh, come on, man. You don't really believe that, do you? I hope you don't, okay? You do not even need money to buy real estate, all right? You do not need money to buy real estate and real estate investing business. I started in this business in 1989. At the age of 23. I'm 47 now. I've been doing this for 24 years. Okay, and even when I didn't know squat, all right, the first couple of houses I bought them the conventional way, put 20% down, went to a bank, that kind of thing. All right, but then I learned quickly. I learned techniques, which back in the day I called the all money down technique, which I describe in detail in my book, Addicted to Real Estate, Why I Can't Stop and Why You Should Start. Take 20 bucks, buy the damn book, read the thing, learn about the all money down technique. It's a great technique, and you can learn how to buy houses with none of your own money, right? Now, some of those techniques are pretty basic, but that's what I used coming up in the business. But what I've done today is I've figured this business out for you, all right? I have come up with a system of how to buy houses using none of your own money. And if you knew that technique, how to buy houses with none of your own money, guess what? You wouldn't need money to make money, would you? No, you wouldn't. So stick around. Make sure you sign up for this web TV show so you can watch TV shows like this one and learn more about how I buy houses with none of my own money. So you don't need money to make money. Next myth. Let's get on with it. You need 20% down to buy a house. Like I said earlier, what's a conventional deal? You put 20% down to buy a house. You go to a bank, you use your credit, and you sign your name on a dotted line. Do you have any idea what you're signing away when you sign your name to a dotted line on that bank? You're basically personally signing for that piece of property, which means that if you couldn't pay them for that piece of property, well, they'd have a right to come after you for anything else in your life that was available that they could grab, okay? And you could theoretically lose whatever other assets. Now, ask yourself, are you willing to lose everything you've accumulated in life just to buy a stinking piece of real estate? Hell no, man. That is not the way to buy houses. You do not do conventional deals. Conventional deals, they're dead, people. Experienced real estate investors like myself do not go to banks to buy property, and we do not put 20% down. I personally have not written a check since 2009 to buy a piece of real estate, and I've bought many millions of dollars worth of real estate since 2009. Okay, I don't write personal checks to buy a piece of property. All right? Even in 2009, it was a special kind of arrangement. A couple of pieces of property right in my neighborhood, and I wanted to pick them up and add them to my portfolio, and I had some money laying around to do it. But normally, I would never do that, all right? How do I buy a piece of real estate then, you said? If I don't put my own money into it, I use private investors who lend me the money. They invest in my real estate deals. They can get an interest payment made on their loan, or they could get an equity position in the wonderful real estate deal that I structured, all right? So meaning that they might get a bunch of equity for their investment, which we can then later on cash out. All right, so you don't need 20% down to buy a piece of real estate. How about this one? Have you ever heard of this one? You need a realtor to buy a piece of real estate. You can't do a real estate deal without a realtor. Okay, that is baloney. That is not the case whatsoever. The best real estate deals that you're going to do in life are the ones that don't have a realtor sign on the lawn. What do I mean by that? People say to me, hey, Phil, what kind of properties are you looking for? I'll tell you what kind of properties I'm looking to buy. I'm looking to buy real estate that's not for sale. What the hell did I just say? I'm looking to buy real estate that's not for sale. Well, how are you going to buy it if it's not for sale? Well, simple, my friends. The minute that real estate realtor's sign gets put on the lawn of that piece of real estate, guess what happens? It's a retail deal by nature. It's marketed to the entire public. Everybody knows about it. I'm in a competition to buy that piece of real estate with other real estate investors or other homeowners. And by definition, I'm in competition. I'm going to have to pay very close to a retail price, right? Real estate investors who are professionals, we don't pay retail for real estate, okay? And you shouldn't either. Even if you're a newbie, you need to learn this business quick so you don't make stupid mistakes. That's what this TV show is all about. That's what my book's all about. That's what my product, the Buyer's Briefcase, is all about. It teaches you to buy the real estate using none of your own money, without the support of banks, get to keep the properties, and sometimes get paid to buy them. Okay, so I'm looking to do deals direct with the homeowner. So how do I get to the homeowners if the house is not for sale and there's no real estate sign on the lawn? Easy. I pick an area that I want to buy a house in. I generate a flyer that says, hi, my name is Phil. Here's my phone number. I'm interested in buying your house. And then I take that flyer and I go stick it on everybody's door in that whole community. I guarantee you somebody's going to call you. There's a development in my area, 435 units in that area. I constantly stuff flyers all over that place, okay? I pay people to do it. I drop them in the mail. I use a mail service to do it. Sometimes I even walk the neighborhood and stick them on the doors myself. Okay, why? Because I like that community and I want to own as many houses there as possible. I'm thinking about changing the name of this development to Phil Falconeville, but I don't own enough of them yet, so I'm working on it, all right? Well, let's move on. Here's another myth you're going to hear all the time, that you need good credit to buy houses. I'm going to tell you, that one's not true either, right? When you do real estate the way I do real estate, you're borrowing money from private investors. Now, private investors could potentially ask you for a credit report, but typically that does not happen. Typically, the private investors are more interested in the deal than they are interested in you. You have to prove to them that you're a credible individual, you're an intelligent individual, you put this deal together, and you're going to allow them to come in on this deal. But it has never happened to me that a private investor has asked me for a credit report. Not to say that it couldn't happen, it certainly could, all right? But the chances of it happening to you numerous times, so is very slim to none, okay, on the same real estate deal in particular. So people typically end up being your private investor, somebody that already knows you, okay, and they're obviously comfortable with you if they're going to talk to you about this real estate deal. And the collateral that that private investor gets for the piece of real estate deal that they're going to put their money into is that particular piece of real estate, and only that particular piece of real estate. They're not going to come after you for your home or your business or everything else that you've built up in your life, because that's not in play with this particular deal. They're going to lend you $100,000 on a $150,000 house. The $50,000 in equity is more than sufficient for them. So if you didn't pay them, it might take them 9 months or a year to take the house from you, but they would be compensated properly and they would get back their $100,000. So there's no reason to give them any additional collateral or redundant collateral above and beyond the particular house that they lent you the money on. And that's the point to this. These are all strategies that you need to understand. Here's a way you can learn some more. Let me tell you where I'm going to be. I'm doing a lot of meetings in the month of February. February 11th, I'm going to be in Quakertown at Caitlin and Cody's restaurant. Come check it out, 6:30 p.m. I believe the topic is a formal education will make you a living, but self-education will make you a fortune. All right? On February 18th, I'm going to be on City Line Avenue at the Royal Buffet and Grill in City Line in Philadelphia, 6:30 p.m. Come out and check me out. On February 25th, I'm going to be at in Cherry Hill, New Jersey, at the Mandarin Buffet on North Kings Highway. We're going to be talking about Florida, investing in Florida, and how you can be a part of it. And then here's the big one. I hope you're paying attention. All right? On March 2nd, I'm having a workshop where I'm going to teach people how to find real estate deals, how to market and find all the real estate deals you're ever going to need. Now, if you're a serious real estate investor, you better get your butt to this meeting. It's in Warrington, Pennsylvania, all right, at 847 Easton Road. The name of the facility is called the Doylestown Health and Wellness Center. And we're going to be there from 10 a.m. to 3 p.m. We're going to teach you how to find real estate deals, how to market so that you can find these sellers who are going to sell their houses to you directly. This is one of the most valuable things you could ever learn. It costs $100. If you're serious, even a little bit serious about being a real estate investor, open up your wallet, pay $100 and come to this meeting. I'm going to teach you skills at this meeting that are going to carry with you for the rest of your life. I'm Phil Falcone. Make sure you put your name and email address in on my website, addictedtorealestate.com, so I can keep sending you these free TV shows. Make sure you check out my book. Make sure you check out the Buyer's Briefcase. Get your ass to these meetings and get busy buying. Thanks for listening to today's show.